Hey traders, this is Taylor with the Trader's Brain. Welcome back to our series on edge. And this is where I go through the edge that I use in my trading today. And what we're talking about now in this video is developing value. And here we have our standard disclaimer. Please take a look and read this. Make sure you understand and agree with it. This video is only for educational purposes, so keep that in mind. This video now is part of a broader series, so there's a few other videos that come before this. If you land on this video here, please stop, go back, take a look at the other videos. It's really important. There is a sequential order to these, and you're going to want to look at the earlier videos first. Here's a link to the playlist, and there'll be a link on the video as well. And to get into it, some of you have already seen this. If you watch the other videos, then you can probably skip this part. But the framework that I use is called NADRO. NADRO was developed by Merritt Black of Apteros Trading. He runs that prop desk firm. He was with S&B Capital as the head futures trader. And it's a fabulous framework for building out an edge. And I'm going through each one of these components. And today, we're talking about the third component, which is developing value. Now, this framework, as I've mentioned before, really looks more like this. It's a hierarchy. And you start with narrative, which is really one of the core aspects of what this is about. Being able to use auction market theory to read the market, to understand key levels, and to get a strong bias about where the market might be headed. And then from there, there's acceptance. We talked about that in the last video. This video is about developing value, and then we'll cover rhythm and order flow as we go. Okay, so what exactly is developing value? Now, let me take you back first and talk about narrative and acceptance and kind of give you that quick summary because developing value plays a role here. Every morning, what I'm doing is I'm creating a narrative about hypotheses for the market. So that includes levels. So as an example, you see this 40-40 level right here. And it includes a bias. Sometimes it includes a bias, sometimes it doesn't include a bias, but usually it includes some levels where I'm looking at where I think price is gonna react, okay? And that's my hypos for the day. I'm ready to go. And in an ideal world, as we open up the market here, in an ideal world, we'll go straight down to here and then straight back up to here. And that would just be beautiful if things worked out that way all the time. And unfortunately, they don't. That is not how the markets move. In fact, we know the markets move, kind of more like this. Maybe it'll come down here, up here, and then it'll kind of go back up. And so what we have to do intraday and between these levels is look for those areas of opportunity where we can optimize our entry, right? And on some days that entry might be down here, it might be up here. Some days it may not even get down to there. Some days it might actually just go up here and then turn around. And so we want to make sure that we have what's called a developing value framework to understand where we can align to these narratives and biases that we create in the morning, okay? And so that's kind of the concept behind developing value in a nutshell. What are the tools? Well, there are two primary tools that I use. Merritt only teaches the one on the left, which is VWAP, which again, I highly recommend Merritt's course to really learn this stuff way better than what I can do. I've adopted what's called this RSI with trend. I'll talk about this a little bit more. I've adopted this a little bit too to help me gain a little bit more insight into developing value. But with VWAP, that is a core tool that, again, I think I showed a little bit of that when discussing narrative, but there's also an intraday VWAP to look at as well. So again, going back to auction market theory, VWAP is a really popular tool as part of AMT. So let's first start looking at VWAP as an example. So here's a chart. Notice I don't have any levels on here. And actually what I want you to do is pretend you don't even see this line right here going through the middle. you just want to look at VWAP and VWAP extensions. So VWAP is this line that goes right through here, this light colored blue line. And then you have standard deviations here and here on the upside and downside. Then you have these extensions. So this is 2 standard deviations away. This is 1 standard deviation away, right? Here's 2. And what we're looking for is does VWAP offer value in getting into opportunities? And so if you just used VWAP and you just looked at the principles of I'm only trading the edges of VWAP, right? And so I'm looking to do a couple of things. So I'm looking to, if this holds, I'm looking to buy from here. If it doesn't hold, I'm looking to sell from here, right? And so VWAP can provide a good intraday developing value, how value is developing throughout the day approach. And when those things line up with our narrative, then that's when we have just some beautiful perfection. And so here's what our narrative looked like on that day. Here's what VWAP looks like. And immediately one thing that you can see, you see this area right here where VWAP held, and it's over here as well. Right there. And so this is how we use VWAP to identify either rotational behavior, imbalance behavior, and locations, particularly locations that are confluent with our key lines in the sand area. So you can imagine, seeing a trade like this setup when you have VWAP confirming right here just really strengthens taking this long, even though you had this steep move coming down into it. And then, of course, what I'm targeting is at least going back up to here, or my other narrative, I think I talked about this a while ago, other part of my narrative is there's a target way up here as well. Okay. Now, I also use a tool called RSI with Trend. This is a Sierra chart tool, and maybe a little shame to admit this, but it really, all it is, it's a 3-period moving average crossover tool. That's all it is. So it looks at a slow, medium, fast moving average. When all 3 are lined up, it's red. When all three are lined up downward, it's red. All 3 are lined up upwards, it's green. And what I get is another kind of value area that allows me to get into some more, kind of lower quality, higher risk kind of trades. So as an example, obviously this area, if this was my line in the sand, and I don't recall here whether I had this as a narrative or not, but let's just assume I had a narrative here where I said anything below or into this area is going to be a short, right? In and of itself, you can short through this area, but having this confirmation, this is red coming down through here. It turns green a little bit, but I usually am not too worried about that. Again, back to acceptance. I don't have acceptance here, so I'm not worried about something like that. But now I have a double confirmation. In fact, if you can see behind here, and you see how these things work together, this is VWAP 2 right here. So I actually have 3 confirmations. I've got my line in the sand, I've got my RSI with trend, my moving average crossover, and I've got this VWAP as well. Now, if I miss that, which would kind of stink, I also have some of these other opportunities that show up a little bit later. So for instance, this right here, it comes back up, it tests this RSI with trend line. And maybe this is an area to add, or it's an area to get into if I got in late or if I already took out. Now, without going too much into NADRO, this is a much lower quality trade because we already hit our target down here, but that's a whole other discussion about some of the nuances of NADRO. Okay, I'm just trying to show what this looks like in an environment. And here's another example from oil. One of the things I really love to trade about this particular the moving average crossover line here is I like to trade it when we get the first time that we get a switch over. Okay, so you notice it right here, right about here, we switch from green to red, and that first big pullback that we get when we first switch over from one to another, I find usually has quite a bit of power behind it. And so I like these as specific setups as well. And again, I want to just point out, like, notice that we have confluence all through here. Okay. So again, let's take a look. We have this possibly line in the sand. I'm sure that I probably had a narrative here that had me going short here. We have this. We have it after the first big pullback after it's turned red. This is not enough acceptance here. This is good acceptance. Good acceptance through here, right? And so we have one, we have two, and we also have our VWAP right here. So we have 3. So we have really, really fantastic confluence between multiple signals that says, hey, this is a really good spot to short. Again, even though price looks like it's busting right up through there. Okay. Here's another example with ES. This is a little bit messy. When I start to see things like this, where it goes from green, red, gray. Gray is like where it's kind of in between. Green, red, right? This is chop, for sure. When I start to see these quick reversals like this, then I know I've got quite a bit of chop going on. I also don't have really firm acceptance below or above. Now, what I do have, though, is I have a really nice, big narrative. So let me go back to narrative and we'll talk about developing value, because developing value is what got, VWAP is what got me in from a developing value perspective. I would have been very late with the RSI with trend tool, right? And you can see that here. So our narrative is short, okay? This is our line in the sand area here, okay? Not enough acceptance here, but probably not any opportunity for me to enter on any of this. However, we get this nice pullback right to here. That's a great entry location for a couple reasons. One is we're obviously at our line in the sand. 2, here's that VWAP 2 standard deviations. We've breached into here pretty far. Come all the way down here. We come right back up to here, and then we're failing. This failure back into it. So we're returning back into value area. We're going to at least come back and tap VWAP. That's the expectation, is that we're at least going to come back to here. Okay. If you missed that one, well, now for sure you've got another one, and we started to turn a little bit red here on this one. So that might be an entry. Missed that one? No problem. Grab that one right there. Right? So you can see how this VWAP is holding and provides really good areas, particularly when you have confluence with our line in the sand levels. And of course, notice the first times that we actually kind of come back. This is a very shallow pullback, but even if you took this here, you still have this really nice move down to here. If you were late and you wanted to take, something like this right up here, if you took this, it's obviously a stop out. That didn't work, too shallow. We'll talk about rhythm here in a bit. Again, this one would have worked out as well. So I like these, when you turn red. So here's the turn, okay? And then you can maybe call it this one, maybe call it this one, maybe call it this one, as kind of these first attempts back. So that's how you use that one. Another example, back to crude oil. So here we have, rather than going back into VWAP area, this is where we're actually headed out of it. So, I don't want to focus on the earlier stuff here, right? Our short here. I actually want to focus on the long, which is this here. And the idea is we want to accept above this line here. And as we accept above this line, we need to find a way to get in. Okay. So what happens is we have this move up. Okay. Very nice acceptance right through here. We come back and test back down. Now these lines are areas. Okay, so they're areas. I don't treat these as just like a hard line, right? I don't say, hey, this was breached, by 10 ticks, and so it's negated. But what we have here is now we have this. Well, we have a couple things. So we have a red to green condition here. We have VWAP, 2 standard deviations going up. And we have our line in the sand. We have price coming right to here. And this is our first, it's a 2-legged pullback down. We actually have this other support line I have here, which I'm not going to go into, but we have that one there. So our first line in the sand, or our line in the sand comes back, our first pullback, and we have all this confluence, and then we start to head back up. Okay, so late move in the day, but definitely one that's doable based on acceptance, narrative, and then developing value. And here's another one. In fact, I think I covered all of these when I was looking at acceptance, but now I'm just given the viewpoint around the developing value part of this. So when you take a look at this chart, this was the one, if you recall the last discussion around acceptance, where we kind of came down really hard into this zone. And I actually think I had a long idea right here. And what made that long idea hard to take was a couple things. One is, we haven't come back in to this VWAP, two standard deviation level. Like I'd want to be somewhere into here before going long. I have this very steep RSI with trend line, and we have some pretty steep VWAP conditions as well. So, acceptance wasn't there, but for sure, once we kind of move down, we've got the acceptance, as I talked about in the last video. We have all this right here. And now it's a question of how do I get in, right? So maybe you got in here, and maybe that's okay if you did that. Maybe you missed it. And so the question is, how do I get into this really fast, hard trend? Well, VWAP to the rescue and developing value, right? Because as you come back here, by the way, I'm saying VWAP, this is the actual VWAP line, but because I use this whole mechanism, I call the whole thing VWAP, by the way. So I don't want to add a whole bunch of terminology to you. I have specific terms for these things, but just for the purpose of this video, just know, like when I say VWAP, I'm referring to one of these edges. In this case, I'm referring to this one standard deviation edge right here. And so as we come down, we tap this one standard deviation edge, we come down, notice it holds again, it holds again, it holds again, it holds again, it holds again. Look how many times this thing holds, right? It holds 1, 2, 3, 4, 5, 6 times, and then it's boom, it's gone, right? So in terms of developing value, when you don't have, even in a fast trend, so I've shown you a rotational environment, I've shown you a slow trend environment, and I've shown you a fast trend environment. Pretty much these tools can handle any environment, and once you kind of understand and know how to read each one. So that is it for developing value and you don't have to use these tools, but you want to make sure that if you have the broader narrative in place and you have these bigger lines in the sand that you're looking at, these key levels, you want to have a way for figuring out how to get in, how to confirm that price is turning around those areas or coming to those areas, and B, how do you get in between as well? Because sometimes price doesn't quite work the way that we wanted to in the session that we're in, where it comes exactly where we want to our level. And so this, VWAP is one tool. This RSI with trend, which is only available in Sierra Chart as far as I know, although it can be programmed pretty easily in other tools. These are just a couple tools that I use, and I'm sure others have tools that they could use as well. But when we talk about developing value, we're talking about how does value develop on an intraday basis against a broader value narrative that you're looking at. Okay. That's it for this video on developing value. As always, traders, happy trading.